Welcome to our quick update to our weekly market review brought to you by ETM Analytics and Treasury One. I'm joined by Treasury One's currency strategist, Andre Cilliers. Andre, we've been waiting a long time for the pendulum to swing. It happened this week. The pendulum has swung for the interest rate cycle, starting with South Africa in this reporting. We saw a 25 basis point cut come yesterday. I think, it was more or less what we were expecting. But what may have surprised some is that the forward-looking statement was a lot less dovish than I think markets anticipated.
Yes, good morning. 20th of September, chilly morning, South Africa, and the chilliness part of Mr. Kganyago's very conservative 25 basis points following the 50 basis points by the Federal Reserve. But why only 25? Maybe not, as I said, it's chilly in South Africa this morning. Everybody wanted 50 basis points. They wanted more money for the consumer. They want to assist economic growth and so forth. But if you look at this graph, and we spoke about this week, about other central banks that started way before South Africa, but now they're on the green line with Brazil. They started hiking again. So maybe this is part of Mr. Kganyago's conservativeness. Fight the fight properly. If you're busy with inflation, keep focus. Make sure that you stay where you are so that you don't have to go into a hiking cycle too soon again. And yes, he did say to us during his press conference that they now expect inflation to remain below the midpoint for the whole of 2026. He did say that in this cutting cycle, he does see that the repo rate can go down to 7%. That's another 1% of cuts. So a good fight against inflation, retaining the value of people's money in their pockets for the future, and that is really important. He does point out that, if inflation goes higher, it does have an impact on the wage demands from people and so forth. So a really very important fight for South Africa to continue. So maybe not a bad idea, not what everybody hoped for. I think it's also at a time where, if I read the news wires, a heck of a lot of people are actually asking for their 30,000 rands out of their pension funds. If you take all that money, you push it into the market, it could have an impact on inflation. Maybe make sure that does not have an impact on inflation. And at the same time, if I give you a little bit in a quarter of a point and you're getting something from your pension fund, there is a fair amount of a level of comfort that comes through to the consumer. It lasts for 2 months, and then I'll give you another quarter of a point. So we keep on feeding you with a little bit of money every time so that it doesn't spur inflation. And he also points out, and we're all concerned about that the biggest fear for inflation is hikes in electricity prices. So I think he's conservative and keeping the fight there. At the same time, keeping our bond markets and the carry attractiveness there for the rest of the world as there's cutting cycles in other parts of the world.
Yeah, we know Mr. Kganyago likes to keep his hand on the handbrake and kind of ease us into the next cycle. Unlike Powell and the Fed, US, who dived headfirst into their 50 basis point cut on Wednesday. If you look further, they're set to cut a lot more. I think it's about double more points than the SARB will through to 2025. 50 basis point for some might seem like a lot, but I think they really looked at the data and the fact of the matter is, despite all these recessionary indicators that we've been looking at, it hasn't really translated into weaker data points. And that's obviously what Powell and them are looking at. So perhaps justified, and still a lot more to come from them as well.
Yeah, they have a far more aggressive stance, but it's the biggest economy in the world. They don't have to go for carry attractiveness and all sorts of things like that. they are the leaders in the world. They are the biggest economy, and they can afford to be a little bit more aggressive and make sure that they do go for a soft landing and not a hard landing. Don't go into recession. We have spoken that they do have two goals. They have on the one end inflation. They have on the other hand job creation and full employment. And that's what they're going for. And they're going for in that area aggressively. So expect them to cut a little bit more. I think they will tone down to 25 basis points in their next cuts. Otherwise, it would be way too soon, way too aggressive. But they started off aggressively. It was discounted by about 65 to 70% in the markets already. And the interesting one is that if we look at the markets to this morning, and we go back to Tuesday and Monday when we did the videos for this week, then it's almost if there's nothing that happened for the week. But in terms of rate movements, we're pretty much where we were, pretty much unchanged in the markets. But that should not be, we should not look at the level of currencies this morning and then say that nothing happened. A heck of a lot happened. And if you go and look at one commodity, and that's oil, that tells you that the world now expects a little bit better growth coming through, a little bit more demand, and it also spells out the concern in the Middle East and the increased tensions in the Middle East. So there was movements, there was big changes. Whether we just have a 25 basis points and the Americans 50 basis points, it's big changes that's going through, and we will have to see how this filters through over the next couple of months, and how it moves further with more cuts coming through. So big changes, big anticipation that's now fulfilled. And we'll slowly see how these things filter through to the market. But where are we this morning? As I said, currency-wise, where the things are trading, very much unchanged.
Yeah, I just to add to the soft landing, this was definitely a preemptive strike, I think, from the Fed to ensure that they make that soft landing that they wanted to engineer. And we see it, the confidence coming through from Wall Street, even they rallied yesterday. So they're all really expecting this to just benefit the economy and avoid that recession that everyone kind of expected to happen at some point that never came. But the SARB and the Fed weren't the only ones to make their big decisions this week when it comes to interest rate. Bank of England also decided to leave their rates unchanged. It was what we expected as well.
Benefited the pound. It was exactly what we expected. The inflation is still at the higher levels, and they're concerned that might go higher. So they left the interest rates exactly where they are, and it benefited the pound against the dollar quite a bit, trading after that at a high of 133, a 2-year high. So there was no surprises there, and I don't think we expect any surprises from the British going forward.
Then there's Japan. Japan decided to leave their rates unchanged. Now, we know they started their hiking cycle earlier this year to kind of move out of the weird negative interest rate territory that they remained in for so long. And the last time they hiked, we remember there was this big jump in the market, big chaos happened with the carry trade that was busy unwinding. So definitely, I think, a careful approach this time around. Bank of Japan said, no, they'll keep rates unchanged, but it is coming again at some point in time.
Yeah, with a smile on my face, I can say that I think they just wanted an easy Monday morning. They didn't want to wake up with turmoil again. But I think the Japanese are playing an interesting game. For years and years and years, the interest rates was extremely low. So if you start hiking too soon, it will have quite an impact on the consumers there. But I also think that the inflation that creeps up, in my opinion, nobody likes inflation. But inflation does help to grow your economy a little bit. even though not in real terms, but in nominal terms, it actually grows a little bit. And I think they need a little bit of growth. There's been very little over the years. So I think they'll be cautious in letting inflation run away with their monetary policy, but I think they will not be aggressive in the interest hiking cycle too soon. At the next round of a central bank meeting there, I think we could see a change in interest rates. Do not fall behind the curve too much, but as I say, I think they will be conservative.
You said earlier on, it almost seems like nothing happened this week. But as for the rand, I'm sure it gained some support. And you know what? The rand could continue to gain some support as the interest rate differential continue to widen between us and the US. But where are we at the moment?
Back in our range, 1750, 1850. There's no change.
We are.
And we did say that if it breaks below the 1750, that it will very quickly return to the 1750, 1850 level. And we can rather almost speak of a 1750, 18 level at this point in time. But we're back in that range. And I think now that all the decisions has been made and all the announcements has been made, I would not be surprised to see a further uptick, a little bit higher. And that to me would have nothing to do with interest rates that is disappointingly only 25 points lower instead of 50, or the Americans pushing up 50. I don't think it's got anything to do with that other than purely technical and a bit of profit trading. They think there was a lot of positions taken before in anticipation. I think there was a lot of stalemate in people taking forward cover either on the import or the export side. I think everybody just sat back waiting. So I wouldn't be surprised to see some demand coming from importers, and also, as I said, purely technical, some profit taking if we push a little bit higher. But overall, we're in this trading range and we're going to remain here.
So it was the week that we've been waiting for, but I know we started this year expecting, like, the markets were expecting 7 or 8 rate cuts for the year. So at least we've started now only in September. So I know there's still a lot of rate cuts priced in for the end of the year, but as we've seen, it can change in an instant. Andre, thank you very much for your time. We will catch up again then on Monday.
Thank you very much.